Hey everybody, it's Mike from Orderflows, and in this video I'm going to talk about a delta anomaly that we call the price action divergence in order flow. Now, before I jump in, if you like my videos, be sure to hit the subscribe button so you'll be notified when I post a new video. And if you enjoy or get value out of these videos, be sure to hit that like button. That's sort of what gives me that incentive to keep making videos for you guys. So, what is a price action divergence? Well, it refers to a situation where price moves in the opposite direction of a technical indicator. And in this case, it's delta, right? Delta is the difference between the aggressive buyers and the aggressive sellers in a bar, right? That is your indicator. And there's a couple ways you can look at this. Now, when people think of divergence, they think in terms of let me describe it as two types of divergences. You have regular divergence and you have what I call hidden divergence. And regular divergence is something that people always look for as a potential trend reversal, but a hidden divergence is more of a potential trend continuation. And what that means is, if you see this happening in the order flow, it's a nice sign of continuation. And what that means is, right now, just go back to what delta is, right? Delta is the net difference between aggressive buyers and aggressive sellers in a bar. And generally speaking, right, green candles that close higher than where they open, you have net aggressive buying, right? Because that's what moves the market higher is people buy the offer, take out the next offer, take out the next offer, or if the market's going down, people sell into the bid, right? That's the aggressive seller selling to the passive buyer and driving the price down. And you often see, as green candle got positive delta, green candle, positive delta, green candle, positive delta, green candle, positive delta. Just as you see, red candle, negative delta, red candle, negative delta. But there's going to be instances where it diverges, right? You've got the green candle with negative delta, green candle with negative delta, green candle with negative delta. Well, how you're probably wondering, and this is where people get confused oftentimes in order flows. Well, I thought, if the market's going up, you have aggressive buyers. So why would you have negative delta? Well, sort of the reason that you have negative delta is because maybe in the bar at one point, there was very strong aggressive selling. Okay, so for example, on this bar that we have right here at just before 9 o'clock today, it's got negative delta of 20. Okay. Well, what's causing it? Well, you have aggressive sellers selling in this bar, right? We had just made this little swing high. Market's coming down. You got aggressive sellers are in control of this bar. And you got you got negative delta min delta of minus 236 in the bar. That was your strongest negative delta. This bar finished at minus 20. So what that means is early in this bar, you see the selling imbalance of 1245 against 308. So there were strong sellers, aggressive sellers early in this bar. And we finished at only minus 20 and we turned up. So again, now this is a time-based chart. And is based on, when that time period ends. This is a 5-minute chart. So the bar ends after 5 minutes. And at this point, what was taking place was aggressive buyers were coming in late in this bar and were moving it higher because the aggressive sellers were probably done selling at this point. Okay, that's why it actually went from minus 236 delta to only minus 20. So it gained a lot back. Then obviously we had the JOLTS numbers today. That came out, and you got that big bar there. But I'll give you a better example. Okay, let's go back to yesterday. This is in the bonds. Yesterday was the 3rd of September. Okay, because we had a nice rally in the bonds from basically 7:30 all the way up until about 9 o'clock. We rallied from 123 above to almost 124. What was that high? 21. So, a strong rally, over a point and a half, 0.75. And on this move up, okay, so you got, your swing low here, you got your red candle, negative delta, then positive delta, green candle, positive green candle, positive green candle, positive green candle, positive green candle. And on this move up, just to give you an idea how strong this move was, you got delta increasing literally in every single bar, 328, 340, 1000, 1348. 2100. That's what you expect to see. Okay. Now, again, you get some selling coming in here, 755 bar, negative delta. Then positive again, positive again, positive again, growing, growing, growing. 218, 462, 1067. Then you get this bar here, negative delta, right? Minus 42. Okay. Again, look at this bar. At one point, the delta was minus 796, which is quite strong. Was considering that you're looking at these other deltas. This is 1,000, but this is just 462, 218, 1,000, 340, 328. So 796, close to 800, is kind of strong, but it came all the way back from minus 796 to just minus 42 to end at minus 42. Okay, then we continue up, and we get another green candle, strong negative delta of minus 977. Okay. Doji candle, negative deltas. And actually what's taking place here is you see minus 42, minus 977, minus 1599, minus 2933. So negative delta is actually growing. So you have a lot of aggressive selling taking place here, right? And this is strong selling. I mean, 3,000, 4,500, 5,500. So, over 5,500 negative delta just in these three bars here. And even this bar, another 688, so like minus 5,000 in the delta over these four bars. The market's not going down. So what's that telling you? Well, you got very strong selling taking place. That's not pushing this market lower. And if it's not going to push this market lower, absorption is taking place, right? It's not just you just see the strong negative delta and immediately think this market's going to come off. Because if it doesn't, you have absorption taking place. Someone is there absorbing all that aggressive selling. Imagine the delta is minus 2,900. It's a very strong delta. The volume for the bar is 8,051, and the delta is minus 2,933. So 36% of the bar is negative delta of the bar's volume. And it's not enough to push it down. Sort of a clue earlier was this little doji bar here where you had, again, nice strong negative delta that was being absorbed. All that aggressive selling was being absorbed, right? And you can just see what happens is this market, once that, just like here, once that burst of aggressive selling is over, the aggressive buying takes over. Once that burst of aggressive selling stops in here, aggressive buying takes over, right? And we end up going to new highs. And even here, you got another bar, strong negative delta, minus 985. It's a green candle, right? Because really what's taking place, if you look at the bar, the volume, you can see here, 3,090. Someone is bidding the market here, right? That's what's causing you to have a delta of minus 985 is because you have a strong bidder in here. So all that aggressive selling that's taking place at 08 is being absorbed by a strong buyer. Okay, just like, over here, right? You see 2851, all that aggressive selling that's taking place at 03 is being absorbed by a strong passive buyer. That's what's causing you to have this minus 977 in there is someone is stepping up to the plate and saying, hey, you know what? Not on my watch. This market's not going to go lower. And it's one thing, if you're looking at a footprint chart to see this, it's more of an advanced thing. But what we have is a tool on our Orderflows Trader software. It's a setting that's called price action divergence, right? I don't want to call it delta divergence because we have that for something else. But here, price action divergence, we're just going to enable it here. And it's going to show you on your screen where it is taking place. You can see right here, right here, right here. Green is bullish, red is bearish. Okay, go back to the previous day's session. Well, nothing really standing out there, but I can see there was some shooting out from this day. What day was this? The 30th, right? You can just see all this negative price action divergence taking place right here. A little bullish one, a little bullish one. Then bearish, as this market drops from 18 almost down to 00, it gets down to 01 before it starts going sideways. And just look at today. Today is let's say Wednesday. This holiday's really got me all screwed up. Literally right before that big pop up on the JOLTS number, you had it right here. Earlier in the day, around 7, you had a couple back-to-back price action divergences. And again, if you're more advanced order flow trader, that you're able to sort of spot these things with your eye, great. But that's why we create the order flows traders, is to help traders understand that what's taking place. I mean, that's the bonds. And again, this is a 5-minute chart. Honestly, I also look at bonds on a 4-range chart. And it doesn't matter if you use a 4-range chart, a 5-range chart, or whatever range chart. Really, the type of chart you want to look at is one that's going to help you understand what you're looking at in the order flow. Okay. And you can see here, this was around 716. You got the bearish one. These are stacked buying imbalances, what's showing up here, here, here. Again, some smaller ones there. Go back to, yesterday on this move up. Again, it came in a little bit earlier here, around the 123.22 area. And you can see, that's almost a whole point move right here in the bonds. Then even along the way, you're getting some more confirmation one. And this goes back to what I was talking about, sort of a regular divergence and a hidden divergence. When you see these in trends, it could help, give it some, think of it as adding like lighter fluid to a fire. You've already got a lot of bullish information taking place on this move up, and then you see that divergence come in, you know that this move has just got it's rocket fuel. Because why? Because what you're seeing strong bidding coming into this market. I mean, look at this bar right here. People are going to say, well, it's got negative delta, minus 1801. This market, strong sellers, market should come off. But it doesn't. That's where it catapults from. And if you're looking at the actual volume that's taking place, 4,000 on the bid, 3,500 on the bid. The heaviest volume on the offer side is just 2,800. If you're looking at a market like yen, yen I think is a nice market to trade now after it sort of found its what do you want to call it, ever since a couple weeks ago with what happened in Japanese markets. The yen's been having nice moves. And again, this is a range-based chart, a 4-range. Whether you're using a 4-range or even an 8-range, doesn't really matter. If you want to go on a 5-minute chart, you get some nice signals there. I know a lot of people always ask me, hey, can I use order flow on a 5-range chart, on a 5-minute chart or 15-minute chart? What would I recommend? Yeah, you could use order flow on those types of charts. Now, there's certain things in the order flow that you could use, and the price action divergence tool is one of them. I mean, it's giving you buy, a little sell, then another buy. Right. Again, this is a 5-minute chart. So I don't know if you'd want to put on a position right ahead of the JOLTS number, but if you did, it did give you that. But I'm not going to claim that as a great trading opportunity, because I don't necessarily recommend traders jump in front of a number like that. But you can see here the day before, literally right off the swing low, you got this nice move up. Okay, nice move down. So that is the delta anomaly that we call price action divergence. Okay, it's a tool that exists on the Orderflows Trader software, right, to help you understand what you're looking at in the footprint, right? Because again, there's a lot of information in the footprint, right? The footprint is just data, right? It's up to you to analyze that data, and that's what the Orderflows Trader does, is it helps you analyze that data. Because there's no point in looking at a footprint chart if you got no clue what you're looking at. But fortunately, we live in this computer age where software can do a lot of the heavy lifting for you. So that's the price action divergence tool, right? Just to enable it, you just click on it. Boom. All right, everyone. So thanks, and I'll catch you guys on the next video. Bye-bye.